is Wednesday, July 16th, 2 p.m. EST God's time,
God's time.
UTC 6 p.m. for those worldly listeners of ours. Today we have with us again Andrew from Block Scholes. Andrew, what's up? What's up?
Hey, good to see you guys again. Been a while.
Love that.
Thank you.
We try to get you on every quarter, though. Talk markets, talk vols, see what's going on. We pretty much have like the same Rolodex of people going through, right? There's only 100 of us in the vol space, so we just cycle through who we can. Of course, I acknowledge your hat off screen, but look at that baby. That is a great hat.
Market makers love him. I think it's probably more true than it needs to be. But yeah.
Have you been trading personal account at all?
No, which is a shame. Sitting on the sidelines, watching a lot of fun stuff happen, but working with clients who are doing some really interesting stuff in vol space. So yeah, I sort of get to take part. I live vicariously through these guys, delivering ideas, delivering strategies. Really fun when they put them on, and then really fun when they make money.
What kind of stuff can you give any insight into that? What are you thinking? What are you guys putting on?
Yeah, for sure. So a lot of like relative value stuff on the term structure. So of course we take requests for directional trades from clients. Okay, they have a bullish view on Bitcoin, let's say, and they want to find a cheap way to do that, a way that makes sense given options markets positions. But a lot of the stuff we find ourselves generating and pushing out in terms of signals, in terms of strategies, and the stuff that we find ourselves backtesting is relative value stuff on the term structure. So vol here looks cheap relative to this part of the term structure. It looks more expensive over here. Buy this, sell that, do a Vega neutral. And if you find places where it does that repeatedly, then you start to get a more systematic strategy, right? I don't think we're in a place where we want to be doing full-time automated systematic stuff. That doesn't seem to be, firstly, there's not the depth for that in crypto and crypto options. Plus you'd get killed on trading fees doing it anywhere near high frequency. But we like the sort of blend of discretionary versus signal. So I get a signal, I've back tested that signal, I know what to do when I see that signal, but it's up to me how I size it, how I position it, and how I would choose to execute, if that makes sense.
And you guys are just offering this as a service, or you guys are doing like a SMA type thing where you're bringing the tech and doing it on their account?
No, it's the former. So we act as an outsourced research desk to hedge funds or to asset managers. That means that they're working on a one-on-one basis with us. They can either come to us with requests for stuff to backtest, or we go to them with ideas that we have. I find it's a really nice way to stay in touch with people who are marketing, who are actually trading this market, get their views, but also a good chance for me to share my views and to express my views on the market as well.
Well, that's good. You get to still give advice and put on trades, but not have to have the mega risk on your personal account losing your retirement.
Some may say a dream job.
A dream job, yeah.
Like a call option for your call options, right? I only get the upside, I don't partake in the downside.
The everything's a call option guy.
Yeah.
That's a new hat. Everything's a call option.
I don't mind that as a hat, I mean, I find myself saying this all the time, like with my family, with my partner, with my girlfriend, like talking about optionality where you probably shouldn't be.
Exactly. My wife is like, doesn't get options at all, doesn't get trading at all. So when I talk, she probably just goes to sleep.
Well, why should she? Trading's stupid. She has a normal life, does normal things. My girlfriend.
Yeah, she lives in the real world, that's for sure.
She's like, you're making money, right? Okay.
Do I need to worry about this?
I think it's easier to explain market making and trading more than meme coins and shit coins and what's going on in that side of the space.
I think so. Although, yeah, I think my girlfriend relates more to like dog coins. It makes more
Yeah,
sense.
I was gonna say, I think we just think that, Marty. Like, I was talking about this with some friends the other day. How, like, I was using XRP as the example. We've been telling our normal friends that was a scam since it was like 2 cents, and it's pushing $3 now. And you have people who will message you asking if they should buy XRP, and you're like, sure, you can buy that if you want to, but you should probably just buy Bitcoin. And they're like, well, I don't want to buy something that's already $100,000. XRP is only $3, and like it could still go up a lot. That's their thought process. It's only $3. I want to own it. Like, unit bias is a motherfucker for real.
Oh, for
Unit-
sure. That's why iBit works, because it's like $60 or it's 67 or 68 today. Like, that's why it works. You have to buy X amount of shares to create one Bitcoin. But oh, look, people think that they probably own one Bitcoin for $68.
You wouldn't buy half a car. You wouldn't.
You
wouldn't-
wouldn't. You wouldn't
You
buy
wouldn't
half of a
download
car.
half a car, would you?
You wouldn't download a Bitcoin, would you?
Yeah, I mean, they're gonna have to do a stock split on iBit soon. If it gets over $100, people are gonna freak out. A Bitcoin's over $100.
That used to be a really big conversation, if you remember back in the earlier days, was trying to get people to conform to calling things bits or sats.
No. Sorry.
And I hated it. I hated the wallets that did that showed me my stuff in sats. I'm like, I don't fucking care. I want to know how much actual Bitcoin I have. I don't want to do math. Just show me point whatever BTC. I know I'm poor.
No, it's good to see it. Like, I think Bloomberg puts Bitcoin as 0.1 million.
Yeah.
That's easier. That
was-
that makes sense.
There's like a step change now. We're in a new regime.
Yeah. We're just changing it.
It felt like optimistic from Bloomberg's side. Like, now we're talking in millions. I'm on board.
Yeah. I mean, it's all how the eye perceives it, right? And especially retail or traders, like if they can buy one Bitcoin for $67, one iBit.
How
They
bearish
think
are we
that-
on the dollar if we're rating assets by the millions now?
Soon XRP will be 0.1 million. That's what I'm told.
Institutions will file for an ETF at 589, and the XRP army will laugh in your face how you faded them for the last 7 years.
Dude, seriously, like the last decade, I think it was one of my first like 10x's on alts was XRP back in the day. And then I was like, oh no, I'm never touching that garbage again. And all you had to do was buy November last year, and you out traded everybody.
Yeah.
XRP the standard. They were always right.
It was 40 cents in the 40s last November 2024.
Yeah, you have to think like they beat the SEC case. They got regulatory approval for a stablecoin in New York. That's like nearly impossible to get a regulatory license in the state of New York. A lot of companies just go, the other 49 states.
The XRP army tried to tell
if you count Canada, but they leave New York. They leave New York out of it. So it was that's part of it. So they have, what is it, RL USD,
Yeah.
and Ripple is, on a M&A acquiring fucking pillage right now. What did they buy? They bought Hidden Road. They bought a brokerage. But it's funny because they use Hidden Road. So how is that not like a conflict of interest? Like they bought the prime brokerages that they use. So there's that. Wanted to twist a little bit away from Ripple and go back into the vols. We have a Voltard on stage, and Bitcoin ETH vols. I mean, pretty much have been going down until the last 10 days or the last 2 weeks.
Yeah.
What kind of changed? I mean, we saw price up, vol down for months and months and months, and the slow grind up. Vols were in free fall. We're looking at devol here, and now in the last couple of weeks, that's still not great. Devol in the 40 handles, 6 months out is 45. January is 45. Like how is somebody supposed to look at that? Look at the term structure and like, how is 45 January not cheap when we're moving, $10,000 a day or $5,000 a day?
Yeah, well, that's the thing, right? That lower level of implied vol isn't actually that far off the level of realized for Bitcoin, right?
Yeah.
I mean, we're up at 40 now, but like several times in the last couple of months, we've hit 25%.
Yeah.
25% is nuts for something like Bitcoin. If you look at the ratio to S&P, S&P's had worse days than 25%, right? The VIX spikes far higher than this on occasion. So actually getting into crossover terms now between US equities and Bitcoin, which is nuts. But it's not a story about implied vol, I think. Someone's sitting on delivered vol. Something is stopping Bitcoin from moving around the same way it used to. Yes, we have movements of 5 to 10K a day, but that's now a far smaller percentage of a much larger number, right? So I think it's a realized vol question. Then the question is, what is causing this realized vol, this big slip? Doesn't seem to be a crypto question. Crypto in general is still as volatile as ever. Ethereum delivered vol is high. You see that expressed in implied vol. So the ratio to Ethereum reached all-time highs, I think. Delivered vol in Bitcoin versus delivered vol in Ethereum. That ratio hit like 2x. It's a similar story for Solana. Solana is not really lower vol now than it used to be. But relative again to Bitcoin, it's 2 to 3x the value. That's not all-time highs because Solana has been a lot more volatile than Bitcoin in the past. But it's a similar narrative and it's a similar trend to what we see in ETH versus Bitcoin. So the story is essentially Bitcoin low vol, in my opinion. And we've been doing a bit of analysis to try and understand why. The drop in the ratio seems to be coinciding with the launch of ETFs, definitely since 2025 New Year's Day, when we ticked over and ETF flows really started in big size. The easy answer for me is that ETFs are acting as essentially a cap on vol. So to the downside, they're that marginal buyer. We talk about institutional interest and this untapped demand for Bitcoin. That expresses itself in, on the margin, an extra buyer when you sell off. So sell-offs aren't as strong. And you also have a stickier buyer, right? So yes, you have people pushing up when prices are rallying anyway. But you have someone who's not going to be selling in every sell-off. You don't have someone who's levered to 100x, 1000x via IBIT shares, right? So we're looking for evidence in this in the size of returns, essentially. What we find is quite mixed. On the one hand, yes, you do have, the main conclusion is that, yes, we do see increased probability or increased frequency of small positive returns for Bitcoin since the launch of ETFs and since 2025. But in general, we see far lower probability or frequency of large returns in both directions. So volatility is low because volatility is low in both directions, but you now have a skew towards positive returns. Small positive returns, but you have a skew towards positive returns now. I don't know whether this continues. And the other question is, why do we not see the same in ETH, right? If ETH has ETFs, why are they not acting as a backstop to volatility in Ethereum? My guess is that ETFs just don't account for that much buying in ETH. And the data
that's what I was going to say. I was like, let's go look at the total inflows of Bitcoin versus ETH. It's like ETH is 10% of the total inflows.
Yeah.
It's not anywhere near the sheer size of the Bitcoins.
Grant was asking if you think that it had anything to do with miners selling calls, because everything they make, they just sell calls for.
That's a good question. But why now? I would ask, right? What's changed from the past? I think miners have always been accused of selling calls and sitting on vols since the halving, potentially.
Yeah.
They have more reason to do that. They need an extra yield. But that's a potentially interesting question. I mean, where would you find evidence for something like this, apart from a big survey of miners and asking what they're doing?
Grand, where are you usually checking your data on miner activity?
Well, we talked to a few miners. They're looking at different yield strategies. Most of it is calls or different various structures. The structured product business in crypto really hasn't picked up. Like you're not seeing a lot of like super exotic stuff. You're seeing like even two prime. They just came out and got I think it's Mara put another
Yep.
couple
Yeah.
thousand Bitcoin in them, and Susquehanna Crypto put some cash equity value into them to get some equity. Um, they supposedly have like 1 point something billion AUM, and I know a couple guys that work there. And with all these miners and all the miners we're talking to, it's just super light structures, low payoff. If they can get, I don't know, 4 to 12% a year, that's like amazing. Especially in kind yield is insane. Like even if it's 4% in Bitcoin, like Bitcoin doesn't do anything. So if you can just do super low risk, no, maybe it's not selling calls, maybe it's selling different wings or different callers or different payoffs that they put on. Um, but it's just not outright calls anymore because shit's just pumping, right? People are just scared to sell outright calls or
Yeah.
go back test like selling 10 or 20 delta calls for the last 2 years. You made money, but like you had like 1 or 2 months there where you just got absolutely rinsed. Can't just do the same thing
Yeah.
over and over again. um, you have to switch it up. But there's some big players now definitely dampening vol. I think vol will get more dampened as more and more structures come on. IBIT is 2 year options, 2 year out options, I think, and crypto's only one. So what happens? Crypto meaning like Deribit, OKX, Premia, Bybit. Every crypto exchange is 1 year options. What
Yeah.
happens when we get 2 3 year options in the crypto space? And what happens when these larger institutions end up putting more and more exotic structures in the future? I'm surprised we haven't seen it now. We've seen a lot of companies come and go trying to either in DeFi or TradFi banks trying to sell crypto exotics, and it just isn't clicking like it does in TradFi. I don't know if you have any thoughts there, but from everything I've seen, it's just not as hot, or maybe it's too confusing, or maybe they can't get compliance to pass it. I'm unsure of the
My guess with no
reason.
knowledge would be liquidity and compliance. Like you don't want commingling of funds, and is there ample liquidity to pull off the strategy you're trying to pull?
I
Or
have a
not the
few.
strategy you're trying to put. Sell them to TradFi. That's what he said. About the
They
money.
try. Like Signum Bank is a Swiss bank that has an offering. Amoeba, it used to be Seba Bank in Switzerland, has like a regulated offering. They just haven't seen the pickup that I thought that we would see by now. It's like all the big miners are just sitting on a bunch of Bitcoin and they're doing some yield strategies, but it's not like I'm not seeing like big institutions, or maybe just not the people I'm talking to, are looking at these exotics. But it just seems like a different product offering, right? Like not even like principal protected notes. People are like, fuck that. We'll just put on basis.
Yeah.
Like we can just get 10%, or right, it's a little bit lower right now, but we can just get 8% on basis and have a very low risk trade. Why do we want to, move money around or get different compliance when we can just keep it in a PB or a brokerage and put these different simple basis strategies on? Like we tried to shop like an arbitrage one time, and this is when basis was like 20%, and people were like, sorry, like basis is 20%. Like, your strategy is amazing, it makes 25-30%, but like we can do this with yards of capital and have little to no downside risk. But now when basis is sitting at a much lower, that kind of arbitrage becomes more and more attractive. We're seeing more nibbles on that kind of trade.
Yes. Yeah. I see similar, but from a different perspective. So I find that a lot of our like ideal client profile at the moment are people who have made a little bit of money in either basis trade or funding rate arbs, but are trying to get into options now because they're looking for for somewhere where they have an edge, because they're finding that this space is just crowded, right? Funding rates, basis trades.
Mm-hmm.
I've got a few thoughts on the mining question. It's a great opportunity for me to plug a project that Block Scholes work quite a lot with called Dolphin, decentralized protocol offering essentially hedging products for miners. So think binary options on Bitcoin difficulty. Super early stage, but I've had a great chance to sort of speak to a bunch of miners through this project, understand their hedging needs. I think Grant's right in maybe it's education. I think education both from the mining side, but also from TradFi side. There is a small supply of this kind of products from people like Saber, who are now Amoeba, who and Signum as well. But definitely from the miner side, I think we're just very early in the sophistication of their strategies, or at least we have been historically. I think we're moving towards now a more sophisticated CFO at these places who are looking to hedge more things. There have been people trying to do this for a long time at each of these miners, but I think a lot of them so far, the risks that they've been looking to hedge have been largely operational. So am I going to get shut down by the regulators? Am I going to get shut off from the electrical grid? Am I going to struggle to import mining rigs or things of this kind of nature? I wonder if now a lot of that is maybe a little bit clarified, that they'll look at starting to hedge more market risks or financial risks relative to operational risks. But it's not clear.
Yeah, it'd be interesting. Maybe we'll get HUD 8 on, or one of my buddies that works at Mara, and we can, as the AI says, delve into that more. It's AI wrote it because it always used the word delve. So yeah, if I read your docs and it says delve, it's definitely AI, 100%.
See, I've had to retire. I always use the M dash.
Oh yeah, you gotta get rid of that.
I can't do that anymore.
You gotta just type in all lowercase or something. Like you gotta make sure that people know that it was.
Like say something.
I write everything or type everything in lowercase for the newsletter, and then Weka comes in and puts it, fixes up my grammar and the spelling and stuff like that. So he knows that it's true and from the heart. The last one I put out was like my views on the space as a whole, and I think we're seeing a run in ETH now, but it's always scary when ETH is running and Bitcoin's sitting still. You have any thoughts on the current ETH meta and what the hell is happening? Front end's mega lifted. We're up, I don't know how much in the week. Enough. Let's just say from July 1st, we're up 40%. Like what's changed? I know the US has some new regulations coming in, but to me it seems that the US is more just the Wild West again, and not really coming out with like clear-cut guidelines and regulatory rules and things like that. It's just become like the Wild West, and you're seeing staking services, you're seeing meme coin launches, you're seeing all of this stuff, where before they were super scared.
Yeah. Well, I think it's things like Ethereum, layer 2s, that really stand to benefit long-term from clarity of regulation. You can't build anything on Bitcoin for a reason. It's designed that way, which means that the benefit it feels from like increased regulation is quite limited. Something with a developer ecosystem, which developers now feel comfortable enough that it's not a career risk to start building on Ethereum, or things like Ethereum. I think recently what's changed is a big narrative about the killer use case of Ethereum. The US is really pushing for stablecoin adoption. And it seems like Ethereum stands to benefit from that the most, or at least is the first benefit of this, right? Most of the projects that are being built by TradFi institutions like JP Morgan, like SocGen, PayPal, all of these are being built on Ethereum or Ethereum layer 2s, at least to begin with. They're piloting there. And it seems to be the actual use case that's going to drive the sorts of transaction volumes that the network was preparing for in upgrades like Pectra and Dencun. So these upgrades made gas prices a hell of a lot cheaper. Firstly, because gas prices were ridiculously expensive.
Yeah, that was insane. Hundreds of dollars to move a transaction.
Yeah, like $70 to send $2 of ETH. And like, well, where does that go?
Yeah, just use Swift.
Or that's Ripple beta, no? Swift.
Yeah, exactly. But what do you think about, like, we've been here for over a decade and we're just looking at ETH and crypto just becoming, or crypto as a whole just becoming the stablecoin network? Like, what else has been built so far that the world is using besides gambling and stablecoins?
So far, very little. I think in the future it's going to be a little bit of gambling, but on more traditional assets. So
RWAs?
you tokenize dollars, and then you need something to buy with those tokenized dollars. So
Song coins, Marty.
What was that?
Song coins are the new thing, Marty.
Yeah.
The new real world, the new real digital world asset.
What is a song coin?
It's like the NFT people realized that NFTs are tokens, after the end of last cycle. So now they are, instead of releasing music NFTs, they're releasing tokens tied to music.
Cool.
Okay.
I mean, eventually it's all going to be tokenized, but it's going to be some, like, are they going to build it on a public blockchain? I guess let's go around that. Like, I'm all for that they're going to put stuff on chain, that it's going to be instant settlement, that's where the future's headed. All the kids have TikTok brain now. They're not going to wait T+2 days for settlement, but like, it's all going to be on private chains. You're not going to be able to just look at everything on a public chain.
Oh yeah, me and you've talked about that plenty. Like I've always kind of laughed at this. I don't know, this like this turning of the nose to the idea of almost everything, or everything as in like all companies having like blockchains. And it's like every company has their own database right now, and a blockchain isn't some like magical thing. It's just a distributed
Mythical.
database.
It's not
So,
magical, it's mythical.
So like, if you believe that we're continuing to move towards a full digital economy and digital world, then of course everything would be on chain. Like, just because it's not on your chain doesn't mean it's not on chain. So I'm fully with you. There will be tons of private blockchains, as well as more public blockchains that get created.
But at least with the recent shift towards stablecoins, that has been happening on public ledgers. I think that is a big difference to the past. The reason why,
Robinhood, like, taking a big step, right? Like, they're a huge public company. They're building on Arbitrum, and then they're going to build their own chain. But what it seems like, and what I think I didn't misunderstand, is that they're still going to build that using Arbitrum stack. They're going to build an Orbit chain and spin off, Robinhood chain from there. So all of that, is in the public view, on a public database, on a public blockchain. And I think you'll see more companies do that, but that's not to say that there won't be companies that want to keep their data private, like banks or other financial institutions that are going to have their own private blockchains.
Grand has a question. Since you're the data guy, who has a free database filled with trade data? I know that Deribit, you can pull all of the historical data for free. You just have to find the endpoint, but it's all there for free.
It's not who has a free database. It's who's going to sort and index that data for you to give you the data out of the database you want. That's where you need to ask.
ChatGPT, bro. AI, bro. It never makes mistakes, dude. It's perfect.
I think even Deribit doesn't give you historical. So we have some issues. If we miss data, then it's a real struggle to get it back. Like if we don't listen to it live when it's being streamed, it's a real struggle. There are places that can give you it historically, but yeah,
You got to pay.
you got to pay, right? Like it's expensive. It's expensive to store this stuff in AWS or on the cloud. It's expensive to listen to it, to index it, like you said. Yeah.
Nobody's giving out free data, but you can pull it yourself for free. You just have to work on the storage, either AWS or Redis or something like this. Yeah, took Grant 2 weeks to get historical data from Deribit. Yeah. It's better pulled live and then keeping what you actually need and sorting how you want to sort it. Andrew, you want to go in kind of what you guys do besides helping hedge funds and more on your data side?
Yeah,
And,
absolutely.
maybe Grant can get some stuff from you guys.
He said, please sort a fellow Brit out.
Yeah, you guys are fucking neighbors. I met Grant a couple weeks ago and we had a nice dinner. So
Oh,
I vouch
nice.
for Grant.
This was in France?
Yep.
Nice. Okay. I'm disappointed I wasn't invited. Maybe next time.
Yeah. I think he flew over, stayed the weekend, and then went back.
This was in Paris?
Yeah.
Okay. You like the Europeans now, or
in the summer they're nice?
they're not nice in the summer. It's the weather like confusing you.
Yeah, like everybody's smiling because it's sunny, but like in the winter they're fucking rude. Everybody's rude as fuck.
Yeah, I mean it's horrible here in the winter. But yeah, I'm getting sidetracked. Yeah, we do data. So more than just like historical trade data, stuff that you can read on screen from order books, that kind of thing. What we specialize in is derived data. So for volatility, that means, similar to what you see shared on screen at the moment, but I would say a bit better. But I'm paid to say that. We calibrate volatility surfaces from options prices, and we spit those back out to a whole bunch of other people. We did this a little bit differently to some other data providers. The others who, Glassnode or Kaiko or these kind of guys, what they do is they pull a lot of data, and their real edge is just completeness. Essentially, if you need something, there's a small version of that there offered in their offering, right? So instead of going that sort of mile wide and an inch deep, we went inch wide and a mile deep, essentially really focusing on high quality option stuff. So this is proprietary cleaning processes for volatility surfaces, removing arbitrage, a lot of data smoothing, a lot of really taking what is kind of shitty crypto data and making it robust enough that you can rely on it. And it took us a long time to do, right? This kind of stuff is not easy. We've been building it with the guys that were building it at Bloomberg before. We've got guys, ex-Goldman guys who have built these kind of services before. But we're really like focused on options. But since then, we've been building out our other data offerings. So we do a lot of perp stuff. We do a lot of spot indices, a lot of this kind of stuff. Usual delivery, take it as an API, that kind of thing, rather than just emailing CSVs on a daily basis, which is historically not a very easy way to integrate with other people's systems. But what we do is, in research at least, is we build on top of that data. So I wouldn't be able to do what I do without a reliable vol surface to price options and to calculate Greeks and to make decisions in this way. We also do a little bit of problem solving for clients. So if someone comes to us with an interesting problem in derivatives, then we're able to use our expertise to put that together and solve that problem. So maybe it's optimizing spread, or maybe it's finding a clever way to put on some exposure, or maybe it's an easier way to build a margining system. All of that built off of this kernel of data that we pull.
I know you guys do a free research. we just shared your Telegram. I don't think people knew that you had a free Telegram, that you put out a daily bulletin with everything. So we shared that.
Yeah.
You guys have a free version. You guys have a paid version of the research. I know that you guys do like institutional level data. I know that you guys are working with Premia for their new offering and Kion V4.
Yep.
But do you guys offer like a retail level access to data? Like, is there a retail level plan? I don't know. It's $100 a month or something.
There's a $125 a month, which retail can take up. We deliver it through research. So it comes just as a bundle with research, gives you access to our Telegram bots, live pricing, live charts, that kind of thing. You get access to all of the research that we put out at the $30 a month value, and you get some limited access to data as well. So yeah, all the way, we're trying to keep it as simple as possible such that we deliver, okay, I'm a Block Scholes retail subscriber. That means I'm subscribed to the research. And I get everything else that comes with it that way. Reducing decision fatigue, basically, when trying to get people to sign up. You're exactly right. We have a bulletin that we post on the free chat once a day. And then you can click into that and see the full version for $30 a month, $1 a day. And alongside that, you get access to all of our deep dives. We do have a more institutional sort of focus. What that means is we go a little bit deeper. We try and convince ourselves of the facts. If it's a DeFi protocol, for example, we'll usually try and get access to the team, and we'll try and speak to them, understand it from their point of view. On market color kind of side, we go a little bit deeper, try and use some of our expertise, and then on the sort of reuse space, we try and do it to the same sort of quality an institution. So we recently looked into stable coins and where they're getting built. That's why I'm able to speak about this, following the research that we did.
And I don't think people realize some institutional newsletters are like thousands of dollars a month.
Yeah. We're not charging thousands. Maybe I should. Maybe more people would sign up if we had $1,000 a month.
Yeah, you only need 5 people to sign up, and then you're like, okay, cool. When there's this guy, I forget his name, is Arthur Hayes uses them. It's like $3,000 a month or something.
Yeah.
You're like, Jesus Christ, but it's a full institutional grade, hedge fund only type readership. Yeah. It's very, very interesting. I guess when you're running a mega fund, it doesn't matter what a couple grand a month is.
You need your Palm Beach.
Yeah, that's the appeal. You want to be providing at least that amount of value to someone on a monthly basis. So you want to monetize that a little bit.
Of course. And, when they're putting on yards of capital, what's a couple grand a month, right? Not much. Andrew, anything else you want to say, put out? We're coming up on 40 minutes. It's always great to have you on.
No, I think I covered all of my my talking points. Want to shill the research, shill the Telegram bot. Since you shared it in your group, we had, I think, maybe 20, 25 guys sign up. So at least sign up to the free group. So yeah, same again, more of the same.
Yeah. Maybe not the data you're looking for, Grand, but tons of free data offered by Block Scholes for you.
Insights.
No, and Premia, am I allowed to say that? Premia, you'll be able to pull a lot of stuff for free from Premia that's provided from Block Scholes. I don't know if that's a alpha dropper or if people know that, but you can get a handful of data points from Block Scholes through Premia on the new exchange.
Free alpha.
Very nice. I'll have to double check that and maybe we'll cut it, but
no, like you guys give you still have to go out and price your own options, right? But you guys give the first seed, right?
Yes, yeah, I'm kidding. Implied vols, look, they derivate off them, right? The way that we deliver them is it's easy to get a small amount, but I think to get something that's like operational, yeah, it's a little bit tougher.
All righty, Andrew. Cozy. Love you guys.
It's been a blast. Andrew, seriously, really appreciate you coming on once a quarter, blessing us with your presence. Another ETH bull like myself. You know, there's more of us now, but it's been.
I think if you'd asked me a quarter ago, I wouldn't have been an ETH bull.
I know.
We had a guest on 80K ETH.
Yeah,
that's what
he
they
gave
said.
us. But to be fair, at first I thought that was his, and then he clarified that, you know, he's just aligned with their
It was from ETH Realized. ETH
Yeah.
Realized or ETH Realized, I forget the name of it, but it was their institutional paper, and they put out 80K ETH topside. So
Over what horizon?
what was that?
Over what horizon are they getting?
Oh, just a forever. If it never hits, it hasn't hit yet. You know, we can just keep pushing.
Oh, okay, so like all ETH bulls. Fine.
Yeah.
It's like GCR, you know, 10K
Yeah.
is coming, and he has a longer time horizon than you. So
Just wait. It's coming. Alrighty, fellas. We'll see you.
Appreciate it. We'll be back on Friday at 11 a.m. God's time for those of you that tune into Eden. Catch you then. Later, Andrew. Thanks again.